Hi everyone, it's Sunday afternoon at about 4:15 and this is your weekly gold update. It's video number 345 and I implore you again to like the video and to subscribe. All right, so here we have the gold, and this is a 2-year weekly chart because I want to keep things in perspective. So we had this huge week last week where gold was up 87 and a half. But the fact of the matter is, I don't really see it as particularly overextended. The reason for that is because the open interest has been moving higher along with the price. And that says to me there are new longs, people who are coming in, and frankly, I just don't see us as that overbought. On a short-term basis, absolutely we are overbought, and I'll go back to the daily and show you what that looks like, and we'll bring it back into, let's call it 9 months. So on the 9-month, you can see that we have gotten outside the Bollinger Bands and had to come back in. We did it here. We did it here in a very minor way. We did it here. Of course, that was the big drop relative to the coronavirus and the market issue, where everything was severely sold in mass liquidations. So what we've done is, as usual, we have spent time consolidating, broken out, consolidated, moved higher, consolidated, and moved higher again. Now, clearly on the short term, on the daily, we are outside the Bollinger Band, and that would normally signal a pullback. However, I have looked at all of these pullbacks, and most of them go only to the area that we had just broken out from. So that area is around here between, let's call it 1835 and 1865. So while we could have a down day, we could just as easily tomorrow have another short covering rally that takes us further. Going back to the weekly, we're not outside the Bollinger Band. And again, when we have in the past, here we pulled back to the consolidation, here we pulled back to the point of breakout, and here, again, this is the virus period. But the bottom line is we have a really long consolidation and a running correction here. We could easily get to 1950 before we saw any meaningful pullback, and that's kind of the way I'm going to play it. We don't have any position in the actual gold or the GLD. What we have is a bull spread using the August expiration of Newmont Mining, NEM, where we're long the 65s and short the 70s. That position cost us $1.30. It closed on Friday over $1.50 in the money, and the spread closed at $2.16, which is more than a 50% gain, and I'm happy to sit with that and see how far it goes. We could actually pull back to 1850 and move higher before the third week in August. So that's the way I'm going to play it. If we do get a pullback into this 18 and let's just call it 18 and a half range right here, I would probably get long the GLD again, and my attitude with the silver is exactly the same, although I'll show you the silver. It is a little bit more extended excuse me, than the gold. It was up over $3 this past week, and for a $22.50 commodity, that is really an explosive move, as you can see. The difference here is that looking back, we were running well behind the gold. And as I've pointed out repeatedly, this is primarily a US dollar play. All commodities that are worldwide traded, quoted in dollars, continue to move higher as the dollar weakens. All right, everyone, I hope you had a nice weekend, and let's have a profitable week. Take it easy. And don't forget to subscribe.